Up, guys. Just give it a few minutes to let people get in. Trying to set up this work. Why won't this work? Aha, there we go. Preferences. All right, bear with me, guys. I'm just trying to get my PC set up. All right, what's up, Romain? All righty. First things first, I just want to have a quick look at second. I'm just gonna invite, copy link. Cool. And jump into this right now. So just want to go check out trading questions. There was a few that just needed to get addressed. So we'll do that first. So one of the questions from Akchu in the Discord, just asking about, understand that you're not looking, oh, sorry, hold on here. I wasn't looking at okay, that's a different one. Hi, when looking at a 15-minute zone inside of a 4-hour zone, do we look at non-extreme M15 zones as long as they are valid or similarly to the lower time frame refinements inside M15? We only look for extreme and M15 nested zones. So with this, POIs, yeah, so we can look for several different POIs to be able to start looking for criteria within. So if we have typically you're going to have 2 really reliable ones within your 4-hour zone, and then within the 15-minute zone, you'll also have a couple. Ideally, we're only looking at interaction zones or something that takes liquidity at an extremity, whatever it might be. So yeah, to answer that out again, I'm just going to answer these through the videos from moving forward on the the Sundays as well as Wednesdays. But yeah, you could have a couple different ones. Again, it's just ideal to be able to make sure that they fit the criteria that we've kind of outlined, to give them some some credibility, I guess is what you could say. Next one, ACCHO again, AKCHOOOO. Understand that you're not looking for trades at all on EU, GU, and AU since the big moves have already played out. However, there are also many valid 15-minute POIs newly formed lower in the leg down. Would assume that these zones aren't of interest due to the premium and discount, but may I ask where you decide on drawing your premium and discount to keep you out of those trades? So with something like this, obviously, like what I'm looking at in terms of just what's going on in the market, I want to be able to, like, ideally what we're trying to do is we're trying to program you guys to be involved before this break, right? And then we're going to be looking into targeting demand levels on, higher time frames, whatever it might be. So personally, right now, like the way that I would sort of view this is that like the structural leg is sitting here, right? So structural leg is sitting like this. Ideally, like we don't want to be taking shorts as we're kind of tapering down into here. You still can, there's still pro trend, pro order flow stuff to take, but you just have to be careful, right? Because it's so easy to get lost in 15-minute structure after a daily swing point break. So it's just really important to understand where you're sitting. And I find oftentimes what happens is if you get down onto lower time frames and you're just trading pro 15 structure, pro 15 order flow, you end up getting yourself in a position where ultimately you're just kind of getting lost in lower time frame noise, and you kind of forget what that larger picture is, right? So as soon as we start breaking through these levels on like a week daily, ideally we're going to want to see a push to start to kind of come back, and then we'll start to formulate our counter trend narrative to be able to start taking trades against the 4-hour leg, and then from there we can start looking at different positions within here to be able to start trading ideally alongside with this leg right here, and doing the same thing moving down. So pretty well answered that question. Go through. Well, yeah, and like it's just there's still trades in here, right? So you just need to be mindful of the fact that like there's lots of good tradable stuff in here. Just don't lose sight of what the bigger picture is, right? There's, especially now that we're starting to monitor bigger pairs, or sorry, more pairs rather, there's a lot better opportunities in the market than already breaking a swing point. Like, I mean, would you take a sell? Like, I mean, if it was a 1 minute chart, right? And I always like try to think of this because the time frames it works the same way, right? All across the board. So this is a 1 minute chart right now. Would I be looking to trade this? Would I be looking to trade this? Would I be looking to trade this? And it's just to kind of force that habit into your head that like you don't need to be involved with a FOMO trade that's happened and pushed all the way through at this point. We're trying to train the eye to be able to see these things happening from that higher time frame perspective, and here and here and here, all of these things, to be able to kind of capitalize on the more substantial moves in the market, right? Because now we're starting to get this chop in the market, and you can see what's going to happen, right? We're going to start pulling back. We're going to start pulling back, start pulling back, start pulling back. And when you train yourself to start looking for sells, what's going to end up happening is you're going to miss all these longs that are going to end up presenting themselves. So ideally, I'd just like to see a higher time frame demand zone to the left hand side, mitigate 4-hour order flow shift of some sort, ideally liquidity to take, liquidity to target, and then start getting involved on the leg going up. That's my personal preference, at least. Yeah, they'd be counter against the higher time frame leg, right? But we like, that's fine to trade against the higher time frame leg. Like, we're not trying to trade against 15-minute structure though, right? We're not trying to pick every single bottom, every single top, and trade against what the higher time frame is doing. But once order flow starts to reestablish on the higher time frame, you know what I mean? Like, there's tons of positions in here that we can start taking, right? So that's the way that the trade plan has been designed. It's able to kind of get you on both sides of the market, but you want to always be trading alongside higher time frame order flow. And if order flow switches to bullish against the higher time frame leg, we're going to get involved and start trading against the higher time frame leg into, you know, the premium of the area, or just targeting weak highs, whatever it might be, until order flow decides to start realigning, and then we can start looking for those higher time frame sells and start scaling into positions this way. That sum that up for you? H4 order flow shift before longs. Yeah, I mean, you can get involved earlier, but like, you just have to remember that, like, we're looking for something substantial to happen here, right? You can see this weak break right here. We're coming into this level. We'll probably pull down. Then we'll probably have a flip zone, and then this will start moving like this, right? So these are the areas like we're trying to follow a higher time frame narrative, right? And that's it's a tough thing to do because you have to wait for these things to play out. A lot of guys know how to pick out these bottoms, but you know what? How many break evens, how many losses do you take sitting here waiting or executing on every single 15-minute chalk that happens, and then looking for a 1-minute realignment and all these different things, and you're taking hit after hit after hit, or you know, at the bare minimum, lots of break evens. Let the market do what it needs to do. If the market's going to start to pull back, let's watch it happen, right? Like, let's let that happen. What do we need to see happen, right? We need a break of internal structure, right? That's all it is. So internal structure sits here on the 4-hour, right? This is probably a 15-minute swing point. So in order for us to be pro trend on the 15-minute, what do we need to see? Well, we need to see a break of structure, right? A break of swing. So this is probably 15-minute swing. And what are we looking to do? Well, it's simple. We want to see this get broken. Once that gets broken, that will typically confirm that we're going to be looking at a strong low, right? Temporarily, of course. That makes sense? Everybody good? Watch the flow of money, man. It's the name of the game. You don't want to be trading against what the money's already doing. Couple one if we're good. 2 if you have a question on that specifically. Okay, cool. Awesome. Okay, let's move. What else we got? There was one more. So Jimmy, I have some things that I would like to clear out of my mind. First of all, I would like to see in the charts, which with some examples, if it's possible, how you map out M15 structure. I can see them in the schematics, but I think it would be extremely helpful if I see those examples in the charts with some pairs, because we're trying to trade pro trend on the M15, and I struggle so much with this that can't apply the strategy as I should. Okay, my second question, as it's relevant, if we want, sorry, my screen is so far away from me. If we want an M15 change in structure, that must happen from a 4-hour POI. Ideally, yes, and the criteria would as a community, or we can trade M15 change in structure from an M15 POI. Okay, so it sounds like it's just an issue with structure mapping. So very, very simple. I mean, swing points are highest and lowest, right? So first and foremost, what you should do, Jimmy, if you're in here now, or if you're watching this in hindsight later, first thing you should do is go check out the structure mapping video. I'm actually going to release one of the ones that is part of the foundation series. I'll do that today. It's already recorded. I'll give you guys a teaser video for it. But swing is just like, when you step down a time frame, I think everybody can identify that this is M15 swing and swing, M15 swing and swing and swing, right? Whereas on the 4-hour, this is 4-hour internal, right? So it's all relative to the time frame, and this is how you get into that pro trend, pro order flow state. So swing structure is really simple. It usually has to come from a take on liquidity, followed by an aggressive move, creating a leg in price. That's it. So if this swing point, this is not a swing point on the 4-hour, right? The swing point on the 4-hour is probably, we could argue that it's right here, right? Swing, swing, and swing. And then probably more daily would be something like this, right? So you just have to remember what's happening and keep yourself aligned with the time frames. But you understand the fact that, like, this is the swing, this is the swing, this is the swing, this is the swing on the 15, and that's why the entire plan is kind of designed around M15 structure, because when you're pro trend, pro order flow, and you're breaking through all these levels, I mean, it's very, very easy to get involved in trades, because ultimately we're just trading off of M15 structure. If you need more help with that, yeah, I mean, like I said, we've got the resources, they're in play. There's a couple of different videos that we've done on structure. I would suggest just making sure that you understand that, like, yeah, swing structure is relative to time frame, right? So H4, 15, right? Obviously, we can't see this right now. Like, it doesn't look like structure because we're not on the proper time frame. But if I go down onto something like this, it becomes a lot more apparent, right? Swing, swing, coming up into here, probably not going to break down, probably going to get a push and then pop back up. That's it. Simple, simple. What else? Hi, everyone. Quick question. Does this mean we should only look for M15 POY inside H4 POY, or do you also consider M15 and H1 POYs as long as it's inside the 4-hour premium and discount? I mean, ideally you want to, all of your ideas should come from a 4-hour narrative, right? And like, that's kind of like the idea, is it gives you a little bit more of like just a higher time frame intention. It's not even the highest time frame, it's still more intraday based. But yeah, that's ultimately the bottom line. I would just wait to kind of allow these things to happen on that 4-hour. Just give me 2 seconds. Sorry about that. Okay, what else do we have here? Cool. So Romain's good. What else do I have? I think that's pretty well it. Give me a sec, and what we'll do is we'll get into more of the forecasting. So like I said in late last week, we're going to kind of get away from case study building. We're going to have more of like a formatted how to build a case study, how to sort of create them properly, how to log them properly, just so that we have something to at least measure back on. And more of these are going to be based around the fact that we're going to just give me 2 seconds, guys. Sorry, my parents are giving a house tour right now. I'm just in the basement and they're doing that right now. So anyways, we're good to go. So let's get into, why can't we consider a 4-hour boss here on EU? Where do you see a 4-hour boss? Yeah. To break a substructure, right? Break a substructure, correct? Well, yeah, it's sub, right? I mean, where's the 4-hour leg right now? So that would be sub, right? This is all, anything that happens after we break this swing point is going to be sub. It'll be swing on 15. It'll be swing structure breaks here, swing structure breaks here, but that's it. Is that cool? So it's relative to the time frame, right? And you have to understand that, like, the deeper we get in price, the more catalyst we're going to have for this to start pulling back. That's all. Okay. So yeah, like I said, I'm going to get away from building case studies. I think we're like beating a dead horse at this point with just constantly doing these. We've got so many archive videos if you want to go back and see how to build them and all these kinds of things. I want to focus now more on the really high probability areas in terms of like how we actually get involved, more specific stuff on entries, on management. Now that we've got that library of all these different case studies, we'll get into more of like the nitty gritty stuff. Curious, because you mark this as 4-hour structure, but how do you choose between these 2 points on EU? So so there's two. Yeah, I mean, ultimately, like, just the way that this is built out, like technically the swing is very easy, right? Our higher time frame swing is here and it's here right now. That's it, right? Technically, this is a leg on its own. It has interaction. We could mark this as our 4-hour leg if you wanted to, but ultimately, if you're like, depending on the time frame, right? It's like on the 4-hour, you can see that this is a new leg that breaks, right? Obviously has interaction. This is the swing point. These are the swing points, right? The ones that are aligned with our higher time frame. That yeah, don't overcomplicate it. Like this is even like a forced area to kind of like trade from. Like this is kind of like our decisional area, right? We have interaction, we have a push on liquidity, we have a sweep of that sweep, and then we expand. So this might get ran, right, as some form of area to create liquidity, to be able to then target liquidity, right? To be able to sweep all of this and then get involved at these levels. If that makes, hopefully that makes sense at least. But yeah, I mean, structure is structure. I always like to look at like, where's the most recent swing? Swing is here. Why do we know this is a swing? Because this pushes on liquidity, comes back down, interacts, and snaps through, right? Okay. Cool. Let's get into just some daily stuff. So yeah, daily, I mean, daily structure break, strong high, right? Ideally, take on liquidity. This should be protected. That's the theory, correct? Now, obviously, anything can happen, but the theory is that this is our protected zone. Okay. So all I'm looking for on EU this week is, like I mentioned, like I would like to see, well, this is where the 4-hour order flow shift would happen. So once order flow shifts, confirms that low, obviously want to see it build liquidity, take liquidity, and then we can start trading this up. GU, same thing, right? So getting into, let's just jump on to our 4-hour. So let me ask the question, what level needs to break here, right? A lot of people like to see this, right? Like they'll look in here, they'll rationalize getting this, they'll rationalize, oh, there's a first supply failure, whatever it is. No, that's like, no, that's not what that doesn't mean anything, right? Because then it would be the same thing here, it would be the same thing here, it would be the same thing here. Like we want to be in very, very high probability areas, right? Now we have liquidity building, right? Liquidity building to support that move to start pushing this way, right? And coming back into more premium areas of the leg. And first level that needs to break is here, right? Once that breaks, if this was a 1-minute chart right now, right? And like, let's say all the other factors were involved here, what needs to happen here for a change of character or an order flow shift against the higher time frame leg? It's very simple. We need to see this break. There's nothing unique here. There's nothing, and people get really lost in just justifying picking a bottom or just getting involved at the best possible price. We don't need to get in at the best possible price. What we need to do is get aligned with order flow. Is order flow bullish or bearish right now? Pretty fucking bearish, right? So looking for anything in here, if you don't see a structural level go, it's like what are you doing? You know what I mean? Like what's the game plan, right? You're fighting what's happening in the market. So you're so much like, what would need to happen? What would it need to look like? And it's really simple. And this goes across pretty well all the USD pairings. If we see this break, that's like check number one, right? Once we come back down, ideally we'd like to see lower time frame liquidity, sweep down, and then we want to make sure that we're getting a sharp recovery. Come back down, sharp recovery. And then we can start moving, right? That's it. Don't make things complicated that don't need to be complicated. It is quite literally just buyers and sellers in this market, and just watch how they interact. If the buyers take out the sellers, then guess what? Buyers control the market. You only look for buys. You just need to know where to look for them. And that's what all of our top down does. It's very simple. Don't make things complicated that don't need to be complicated. Order flow is bearish, right? And you can take sells until something tells you not to. And it means taking a loss sometimes. It might mean taking a couple losses. But as soon as you realize that you're taking 1 or 2 losses in that, maybe in a single day, single week, on being on the wrong side of the market, you need to start realigning what's happening in the market and understand what that next possible move could be. Cool. All right. AU, same thing, guys. Like we're getting close to internal boss here on the 4-hour, which is exactly what we're looking for, right? We want to be able to see these things happen. Now, we could also potentially look for, sorry, never mind, my bad. No, we're going to be looking for longs if and when this breaks, or at least starting to look for criteria for longs to start playing against the higher time frame leg. GJ, you know, same thing. Same shit. So swing points, right? We're bullish, but we can play against that bullish leg. Why can we do that? Because we're expecting to take liquidity from these lows. You're not just going to wait for it to come down here, right? And you don't want to be trading against the 15-minute order flow. Is order flow bullish or bearish? Well, like for me, it's switched, or at least it's starting to switch. And the details that tell me that GJ is possibly going to go down quite a bit further is, okay, we've come in and we've mitigated. What have we done? Failed to produce. We don't have a lot of liquidity to go after here, right? Nothing. So what happens? Now order flow is starting to shift. Where did it show itself starting to shift? Internal boss, right? Internal break of structure, boom. Okay. Coming back into this area, we have inducement. To me, the market's going to come down. Why? There's incentive to take out these lows to be able to fill these with a lot more buy orders, right? So we're trading along order flow on the 15, right? So we're looking for that order flow flip to happen in this region on a 15-minute so that we can basically justify this internal, this substructure high right here. Makes sense? Everybody good with that? Drop a 1. The only time we could look for potential buys here is when this breaks, okay, and then comes down and then shows that bullish intention is back in the market. That's it. Buyers, sellers, always think about it and keep things simple. Don't worry about all these crazy liquidity concepts. Think about the whole idea of this Sunday look ahead is to scale back all of the technicals that you've just compounded in your brain over the course of the last week. And you kind of want to dump all that out. You want to just start fresh. We want to be able to say, okay, buyers are controlling the market, right? Or sellers are controlling the market. So right now, sellers are controlling all of these. Okay. Sellers are controlling all of these so far. Okay. Let's get into USD CAD. Okay. Buyers are in control. So buyers are in control. Right? Euro JPY. I would say that the buyers are in control. We've seen the shift, right? XAU. Sellers are in control. Right? Where are they in control from? Right here. Easy, 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 easy. Don't, for the love of God, don't overcomplicate things. Like I said, the whole reason why we do this on Sundays is because you've had a day, ideally you've had a day off yesterday. Your week has ended the day before that. Let's start off on the right foot, on the right side of the money. It's the best way to go about it. Look at how easy this is. If you have your shit marked just like this, okay? First thing you know, sellers are in control. Sellers are in control, sellers are in control, sellers are in control. As soon as you go on the chart, the only thing you're looking for is sells. Now, setting alerts, what would switch here? Oops. It's very simple, right? We want to say, okay, what would change something on this chart? What would I want to be alerted? I don't trade UJ anymore. No, I'm not even looking. So if this needed to be broken, was it Nick that drew this in? What do you think this should be? What do you think this should be labeled? You can throw your mic on if you want, Nick. OFS, bullish intention against HTF leg.
You know me too well, Ty. Put on your mic because I just feel like typing.
I wasn't sure if you're going to do it. Usually you're on me, man.
Yeah, I was struggling with the annotation.
No, it's okay. So, I mean, yeah, order flow, if order flow is shifting, right, and we now have bullish intention, guess what we do to the watch list? Just switch that to green, right? And then you set your new alert. So if we break through this, right? Sorry, Nick, I'm kind of stealing your thunder here, man, but wasn't sure if you're going on. So if we break through here, guess where the next alert goes, guys? Very simple. If this breaks up to here and this is our leg, first thing we want to know is what?
Get into discount.
We want to be in the discount. So what are you going to do? You're going to label out your first POI, that rests in the discount. That's it.
I
Same,
mean, it's
same
very
thing.
easy to just say, what do I need to see next?
What
That's
do I
always the
need?
question.
Exactly. You're always prompting yourself to say, okay, what is the next play? Until you literally get down so far in the process that you are like, okay, now I'm monitoring because things are happening quicker. We've seen the 15-minute order flow shift. We've come down into say this level. We're in the 15 or the 4-hour POI. We've seen the 15-minute order flow shift. We have refined areas. We're looking for the 1 minute to realign, and then we're looking for the 5-second. All the same, all the way across for everybody. So you want to be setting yourself up when you're monitoring a couple more pairs. Alerts are your best friend. You spend almost no time on the screen. Zero, unless there's an actual trade idea that you're already on the 1 minute, 15 minutes already realigned for you. Liquidity to take, liquidity to target, everything's aligned. Until all of that happens, there's no screen time. You should be on for 15 minutes a day, going through your pairs and saying, okay, has anything changed? Yes or no? And maybe what we'll do is we'll create a checklist of like questions to ask yourself to be able to say, okay, this is how I get into my day. We already have a rock solid trading plan, but here's how I can start actually implementing it a little bit better with just sort of rule set to be able to actually set up your alerts. So maybe we'll work on that this week to be able to get something out for you guys that's a little bit more like SOP based. But yeah, so set your alerts up. Here's where things would change, right? Could you still trade sells here? If you wanted to, why couldn't you? If everything aligned for you and all of our concepts aligned, there's no reason you can't take sells. Okay, like I personally don't like sells in here because I think that there's higher risk reward on stuff like GJ. Right? This trade right here that pays for the whole year. If you want it to, right? And you just wait and you understand the details, you look at all these things. This is way more important for me than something that's already broken. That's all I'm trying to say. So can this be traded? If you want to trade every day, you want to trade every single 15-minute structure high, be my guest. There's no issues with doing it. It's not a bad move, but there's better moves that might be available. That's all I'm trying to say. So that's pretty well all I want to talk about today is just kind of getting you guys transitioned from not so much Sunday forecasting, but building out just a watch list of like how to interact with your TradingView app. And right now, bearish order flow, bearish order flow, bearish order flow, bearish, bullish, bullish, bearish. Simple. You click this chart, you know you're only looking for buys. Where are you going to look for buys from? Well, if we need a level of liquidity to take from the market, what do we need to see in order for us to get a valid POI? It's very simple. We need this taken, right? Or we could potentially look at lower time frame stuff in here and this as inducement. That's it. Yeah, no, and like this is what it's for. Keep like, I think trading is like a lot of people get really, really pushed away by the idea of having a bunch of different pairs. And to be frank, I was one of those people for a long time, but understanding how to use these pairs and understanding how to use the tools that are readily available to you within TradingView, man, it's made out so easy for you. Set alerts, understand what your order flow is. Boom, boom, boom. Immediately when you go in the chart, if you click this, you're not looking for a fucking buy, but you should have an alert that tells you where you can start. That's it. You have a contingency plan for every move in the market. That's your job. That's your only fucking job. You analyze and you understand where things would change. If you know where things would change, where order flow would shift, where this would happen, where that would happen, guess what? You're not going to remember everything. Set yourself a fucking alert. I can't go to the grocery store without a grocery list. It's the same shit. Keep it simple. Okay. That's pretty well it for today. Hopefully this is helpful. We're going to get into a lot more of this in the coming weeks. It's going to get a lot more based around just how to build these watch lists, how to build out a proper alert system, the sequence of events that need to happen in order to get these alerts involved. And I'm going to tell you, man, we're going to start really, really running up these bags because We want to stay aligned with what the higher timeframes are already telling us. That's what we've been doing this whole time. But we want to have more of a process-based approach to be able to actually attack these things. And yeah, may this be the first of many. So yeah, drop a one if this is something that you think that is going to give you some value long term. And yeah, I'm hoping that this is the start of a brand new sort of segment within fractal markets. Cool. Any questions to kind of end this off in terms of just the narrative and looking at higher time frame POIs? Cool. So if there's nothing, I'm going to let everybody go. It's a beautiful Sunday here. I hope you guys have an awesome day. We won't be in touch until Wednesday, I believe, is the way that we're doing it now. So make sure that you're checking out the new schedule. I'll be updating all the Zoom links and all that kind of stuff today. So it'll be all fresh Zoom links for this week, as well as new passwords. And then again, every week we'll be switching them out. So just make sure that you're using the appropriate one for the week. And I know Dave's been a busy man helping me out with the website and all kinds of the social stuff, but we're actively in the process of creating and scaling back from the flowchart models. The flowchart models will still be there as a sort of backup, but we're trying to make more of like a point form, kind of like a checklist style SOP. Yeah, so we're hoping maybe this week, but yeah, again, man, we've just got lots of stuff going on, so we're going to try to make this a lot easier over the course of the next few weeks and months. I have a question, but relating to structure on GU. Okay, let's just have a quick peek. GU. Yeah. Go for it. Yep. So those are 15-minute swing points, right? So in order for structure to be made, what's one of the main components that we need to see when you think of swing structure, right? Ideally, you want to see some form of a take on liquidity to create a new high, to create a new low, right? On the respective time frame. So this takes liquidity, right? Right in here, this takes liquidity, that breaks, right? This is not structure. This takes liquidity in here, that's structure, right? Pushes back up, takes liquidity in here, that's structure. I only view structure as an area that actually has a grab on liquidity and then expands in the other direction, right? And that typically solidifies that we'll have a temporary strong high, depending, of course, where we're sitting in the leg, liquidity concepts, all these different things. But the idea is that if there's no take on liquidity, at least on a 15-minute, we're not actually punching in a new lower high or a lower low or whatever it might be. If that does that make sense, by the way? So that's just a sub. Those are sub. Little sub stuff. These are not structural levels, right? This is not structure. This is not structure. There's no take on liquidity in here, right? There's a small take right here, order flow shift, boom, come up into here. Yeah. So you know what I mean? Like, especially if we leave all of this unmitigated, like structure is not as black and white as people think. It can be a lot more black and white than other concepts, but you need to understand that structure typically gets formed from an order flow shift that expands in the opposite direction, creating induced flows to be able to create the liquidity needed to expand in this direction, right? I'm gonna be releasing as long as it's, yeah, I think Dave's cool with it, but yeah, I'd like to, I'll release one structure video for you guys that we've built out for the website, and should give you a little bit more sorry, a little bit more info on cool. Yeah, I'll release that later on this evening when I get back. I've got a bunch of shit to do today, so it's already filmed, it's done, it just needs to be uploaded, so I'll start uploading it now. It's probably going to take an hour or two with the internet connection I have here, but it should clarify a lot of different things. So we typically deal with the the three types of structure, right? Which is swing structure, obviously the strongest levels of structure. And then we have internal, which is usually how we deal with order flow shifting and realigning. And then we have substructure, which is typically the weakest bit of structure to be able to get yourself into continuations and understanding, where continuations should sort of form from. Go ahead, Jeff.
Hey, good morning.
Morning.
Okay, so we have a break up here and we're making bullish order flow.
Yep.
We then get a shift here.
Yep.
This is our daily low.
Yep.
Or whatever our high time frame low. So any trade in this area, you would classify as high probability because until this breaks. Then is that a yes or a no?
Of course.
Okay, so then we break the low and then we're looking for a take on liquidity to continue going low. So now we hit the premium-ish from this leg here.
Yep.
And so now we have, call it, I don't know if you call this an order flow shift or this an order flow shift, but any trade from here until we break this low, high probability.
Yes.
What we need now basically is once this liquidity is taken, once we get the order flow shift, whether it be here or here, we're then still looking to go short.
Yeah,
and
but
this would be the high probability zone once we've taken this liquidity, but whether it reacts here or here. So where I'm going with this is this zone, because where I think what he was asking before, so we had a take on liquidity here, we had an order flow shift here, and this leg here, this is roughly the premium, another order flow shift here. It's kind of the same thing on the lower time frame. So where I'm going with this is, in this case, you have this low, and this low.
Yep.
How do you not say these are not high probability zones where these ones are? I guess that's what I'm trying to, in my head, make like a rule set for.
Okay.
Because it is following the same flow of orders in and out.
For sure.
It's just
So
slower.
So when you look at this and you look at this, right? Like I'm getting involved with stuff like this up here before we break here. Once we start breaking through a swing point, right? Do you want to keep selling or do you want to wait and get alongside order flow in here, right? So it's kind of a rhetorical question, but like for me personally, like I'm not trying to force trades after a swing structure point has been taken, right? It kind of goes against everything that we do. Now, can you still get into these? Sure. Are they high probability? They'll probably give a reaction until they won't, right? Whereas if we come up into these levels and we have a huge take on liquidity and we push down, we get order flow realigning like this, like these are the highest probability setups, right? Like these are the ones we're after. We're trying to trade this into higher time frame intention. Higher time frame intention right now, after we've broken through this low, is not to keep going lower, right? It's to start pulling back.
Yeah, I guess the disconnect for me is on the 4H chart. Like I'm basically trading 4H structure, and I see these as 4H structure points.
They're subs.
And yeah, well, not really, because we have a low, we have a high, we break the high. This is now the new swing structure, right? So on the 4 hour, I see those as structure points. On the daily, I see them as substructure or internal structure. And so what I'm trying to do is I'm trying to understand, like I clearly see this is a daily level. I clearly see this is a daily level. And I totally get how these are higher probability or just larger moves. But I don't see how a trade from here or here is any less high probability from a take of liquidity and your lower time frame order shift. And I'm trying to get aligned with you on this, and I'm still just struggling to see if I'm trading structure, I gotta always be trading the same shift.
Right.
And in the way I'm looking at this 4 hour structure is that this is bearish structure right now.
Yeah. Okay. So the question, like why can't you? Or like, I'm just trying to understand the question a little bit better so that I can answer this properly. But the like bottom line is you can still trade these, right? That's exactly how our plan is designed. It's designed to like ultimately stay aligned with 15. Like to me, this is 15-minute swing. This is not swing structure on the 4 hour, right? So we're still trading pro structure, correct? So these are still high
I think the
probability.
question is more like, why do you see this as sub structure and not 4-hour structure? Am I right, Jeff?
Well, so the way I'm drawing, like I started so I clearly see that this is a swing leg,
Mhm,
right? Because nothing here kind of took liquidity on the way up.
mhm,
Then we kind of break and we get our order flow shift and we're back down. So
Mhm.
then my leg, once this break happens,
mhm,
this is the highest point, this is the lowest point.
mhm,
Then once this break happens, this is the highest point
mhm.
and this is the lowest point.
Right.
Once this break happens, this is the highest point, this is the lowest point. Once this break happens, this is the highest point, this is my low point. So right now, on my outlook / chart for the week, this is my 4-hour high, and aka the area that Jason is looking for an order flow shift.
Right.
But that doesn't mean that I don't want to take a short from this area.
Right.
And that's kind of the way I'm wired. So price enters that X, gives me the 15-minute order flow, go to the 1 minute, enter on the 1 minute, make lots of money.
That's right.
Kind of what I've been doing.
And that's how our plan is designed as well, right? Like the top down is to get you in on these. I'm just saying personally, these are still really good trade levels, but I'm trying to train people to see these as the higher probability areas once we take all of this, because ideally we want to see this liquidity to take, liquidity to target, higher time frame, work our way down. So these are still the same thing. It's just done on lower time frames, right? So we're not trying to get people funded and put this on a pedestal. We're trying to create traders that are going to actually be able to get involved with higher time frame intention and be able to swing these as well, right? So maybe I'm just miscommunicating this, but these are still excellent trades. There's tons of money to be made in here with those lower time frame confirmations. But if we start entering a weekly demand level, right, or whatever it might be, I'm waiting for order flow to realign so that I can start trading this against that higher time frame leg, and then I can start getting involved.
Mhm. Yeah, no, I clearly see, but I'm also like, I'm still, I just find it's got a shitload of work to do it the way you're doing it with like the multiple pairs.
Mhm.
And because I'm trying to do an end of day markup for every pair that I'm trading.
Right.
And so I'm still sticking to just EUGU at the moment.
Sure.
And, but I do get how, if you're in a daily level, it's usually a better place to trade than at a 15-minute level. But,
For sure.
okay, it'll take me some time, but I'll get on board.
Awesome. Good question, man. Like, honestly, I'm just, again, it's not that they're bad regions. So this is a great region intraday, right? These are all great regions intraday, which is ideally the tone of our entire trade plan. However, we're trying to make sure that we're staying alongside with that higher time frame there. So if we, like I said, if we're entering like a weekly zone or a daily zone or whatever it might be, all the way over to the left-hand side, and we are expecting potentially to see a pullback because we've just broken 2 bits of higher time frame swing structure, this gets dicey trading in here is all I'm saying. Like, the lower we get in price, personally, like, these are my areas that I'm looking to potentially see these pull back, and I'd be more focused on trading a pullback once we get that realignment to start potentially doing that. That's just, again, my personal take on this. Okay, do y'all think it would be better to incorporate daily time frame? So I don't typically use it, and I'm able to see like where my daily is, right? And again, this trade plan was designed for me and how I trade, and now how I have to articulate it and be able to teach it is become a little bit different, right? So obviously, daily high, at least for me, this is kind of like, this is an entire leg for me. And then this is all M15 swing. That's how I view this personally. Anyways, I'm going to release the structure mapping video that I made. There's actually, I think it's a 3-part series. So I'll release those all a little bit later on this afternoon. And it should clear up some questions and just how I map stuff and how I interpret stuff. Like, personally, like I said, like, this is internal. This is all sub. That's how I see it. Because it doesn't break anything relevant to the left-hand side, right? It just breaks its own structure. So that's substructure to me. Anyways, I'll release it. You guys can have a look. I'm sure it's going to create a lot of dialogue, which is good. And then we can get on the same page moving forward and make a Google form for structured question videos. Yes, I will. I'll get Dave to get that sort of going. And maybe what we'll do is we can maybe look at this. We'll set something up for Wednesday. So when we do our trade recap, we can have all of our questions kind of together for that is what we'll do. So I'll get this released. Let me just get them uploaded to the private YouTube channel or the unlisted YouTube channel. It's going to take a few hours to do this, so expect it to come out a little bit later on this afternoon. And it's a 3-part series, I believe, is how I have it made right now. They're only about 10-minute long videos, but it should clear things up. So we have a schematic version and then 2 separate versions with applications on the charts for both bullish and bearish scenarios. Each one gets a dedicated module. So yeah, we'll recap with this on Wednesday so that we can just talk about it a little bit more in depth and work from it that way. Cool. Daily structure, H4 realignment, H4 structure, M15 realignment. That's it. That's it. Fractal nature, right? Okay, I'm out. Hopefully you guys have a good day. Sorry if this caused any confusion, guys, but like I said, I'm going to get these ripped out to you guys this afternoon, and at least that way we'll be able to kind of talk back and forth later on this week and kind of get this all solidified for the end of the week. Awesome, guys. Have a good weekend, and I will see you guys a little bit later on this week.